Good day, ladies and gentlemen, and thank you for attending this virtual meeting. I'm pleased to welcome you on behalf of HEG Limited and SKP Securities to HEG Limited's demerger update webinar. We have with us Mr. Riju Jhunjhunwala, Vice Chairman, HEG Limited, Mr. Basant Jain, Joint MD and CEO, Bhilwara Energy Limited, Mr. Manish Gulati, Executive Director, HEG Limited, Mr. Om Prakash Ajmera, Group CFO, HEG Limited, Mr. Puneet Anand, Group CSO, HEG Limited, Mr. Ravikant Tripathi, CFO, HEG Limited, Mr. Ankur Khaitan, MD and CEO, TAC Limited, Mr. Hiren Praveen Shah, MD and CEO, Replus, and Mr. Salil Bawa, Group Head Investor Relations. Friends, this virtual meeting is being recorded for compliance reasons. During discussion, there may be certain forward-looking statements which must be viewed in conjunction with the risks that the company faces. We'll have the opening remarks from the management followed by a Q&A session. Thank you, and over to you, Mr. Jhunjhunwala.
Thank you, Naveen. Good afternoon to all our shareholders and participants on the call. Thank you for joining us today and for your continued trust in HEG and the LNJ Bhilwara Group. Today's call is focused on our proposed composite scheme of arrangement, the demerger of our existing graphite electrode business into a separate listed company, and the formation of a listed HEG Green Tech company that will house our integrated clean tech business. A brief note before I begin: certain comments may be forward-looking and are subject to market conditions and to the receipt of necessary regulatory and statutory approvals. Why are we doing this? Sharper focus and value unlock. We are at an inflection point where two strong franchises sit within one listed company: a mature cash-generating graphite electrode business and a fast-scaling green tech growth platform. These businesses have different growth drivers, risk profiles, capital needs, and valuation frameworks. The scheme is designed to unlock value for public shareholders by creating two focused listed companies, each with its clear strategy, governance, and capital allocation discipline. In practical terms, the scheme is intended to deliver a clear value discovery, as each business can be valued on its own merits or demerits, better transparency and capital allocation assigned to each business model, improved strategic flexibility wherein maintaining strong governance and promoter alignment. What the schemes means for you as a shareholder. Subject to approvals, the scheme proposes the following mechanics: demerger of the existing graphite electrode business into HEG Graphite Limited and issuance of shares to HEG shareholders in a 1:1 ratio on the record date. Merger of Bhilwara Energy Limited, which houses two of our hydroelectric assets, with the existing listed company, with the shares issued to BEL shareholders other than HEG based on completely independently determined swap ratios reviewed by merchant bankers. Post-implementations, HEG Graphite Limited will be renamed HEG Limited, and the current HEG Limited will be renamed HEG Green Tech Limited. The structure is designed to preserve continuity. You will hold shares in the legacy business of graphite electrodes through the new HEG Limited company, and you will also hold shares in HEG Green Tech, representing the clean tech businesses. Understanding HEG Green Tech, an integrated clean tech platform in India's energy transition growth story. India's decarbonization and electrification agenda is accelerating at the adoption of by the renewable and energy storage, and in turn driving demand for battery materials and enabling infrastructure. HEG Green Tech is being built as an integrated clean tech platform to operate across the renewable energy and battery storage chains, both growing at a fast pace. HEG Green Tech, as you see below, will be operating across four synergistic pillars. First being the advanced battery materials. Over the last couple of years, India's renewable capacity additions have shifted away from standalone solar and wind projects to FDRE, RTC, and storage-led tenders, including standalone BESS driven by intermittent generation, peak versus off-peak differentials, phasing out of banking, tighter DSM provisions for renewables, supportive policy measures, and falling battery prices. Battery storage is increasingly becoming a critical component of upcoming projects, both for utilities and for CNI consumers. India has also seen a very strong growth in EV penetration across segments, with the government's agenda of making India more self-reliant in battery storage. A range of fiscal and non-fiscal measures are encouraging local manufacturers of batteries and associated value chain materials. More than 150 gigawatt hour of local lithium-ion battery cell manufacturing capacity has already been announced in India. At HEG Green Tech, we have identified advanced battery materials as a key growth pillar, starting with the establishment of a 20,000 tons per annum active anode material manufacturing facility. We intend to be high quality, technology led anode manufacturer catering to multiple battery chemistries and to end users. To this end, we are working on silicon and graphene based doping solutions to enhance the existing anode performance. RE power generation, solar and BESS. Our investee company RE Plus is a leading battery energy solutions provider with a broad portfolio across the BESS, EV, and hybrid applications. RE Plus has a highly automated 1 gigawatt cell to pack line, which is currently being expanded to 6 gigawatt hour as we speak, and it serves marquee customers across these segments. RE Plus is creating a niche by indigenously developing smart battery and grid management solutions in partnership with leading academic institutions, along with a cloud-based analytics platform. These capabilities can help improve performance, enable AI, ML-enabled insights from across the battery life cycle, and reduce the levelized cost of storage. RE Plus is well positioned to benefit from the rapid growth in storage adoption across segments and is building tailor-made solutions aligned to global standards. It has also established an office in Dubai recently to serve a growing Middle East and Africa region where grid-scale storage deployments are scaling up as much as India. The third pillar being the renewable energy IPP. As mentioned earlier, India is moving from a standalone solar and wind to FDRE RTC projects with a large BESS component. A cumulative BESS capacity of over 250 gigawatt hours is projected across utility and CNI segments, with annual installations expected to rise meaningfully over the decade. With RE Plus's in-house technical expertise in energy storage solution and a team with a track record of building and developing multi-gigawatt solar assets, we are building a storage-led IPP platform to capture the growing demand for firm and dispatchable renewable power. During the current financial year, we have secured an order for a 200 megawatt hour BESS project in Gujarat. We have emerged as the L1 bidder for a 1000 megawatt hour standalone BESS project in Maharashtra. We are focusing on standalone solar and solar plus BESS projects in both B2G and CNI with a clear aim to deliver an equity IRR of anywhere between 16% to 20%. The fourth business, which is the pillar of our company to begin with, is the RE power generation, the hydroelectric plants. We have two highly efficient run-of-the-river hydroelectric projects in Himachal Pradesh. Malana, around 100 megawatts, operational for 25 years, and AD Hydro, 200 megawatts, operational for 15 years. Both delivering consistently an 80% high EBITDA margin. Both these projects are debt-free, eligible for renewable energy certificates, and operate as run-of-the-river plants with approximately 3.5 to 4 hours of reservoir capacity, enabling peaking generation. These assets generate steady cash flows of approximately 300 crores plus annually, strengthening the platform's resilience as we scale. We have also signed a conditional agreement to acquire a 76 megawatt hydroelectric project in Uttarakhand and are in the process of securing all the necessary approvals. Subject to approvals, this could be a very attractive addition into our hydro portfolio. Roadmap, discipline, and shareholder value creation. We remain committed to disciplined execution and transparent communications as the scheme progresses through the stock exchange and NCLT approvals. If approved, shareholders will have direct ownership in two focused listed companies, one anchored in a global graphite electrode franchise and the other positioned for long-term growth in India's energy transition, enabling clear value discovery and unlock value over time. Thank you for your time. With that, I would just like to introduce to you the management team that is here today with us. And apart from them, others who are present with us who will be answering the questions. I'm pleased to introduce Mr. Basant Jain, who is the CEO and the Joint Managing Director for the company. His resume speaks for itself. An ex-MD and CEO from Mahindra Sustain. He's led clean tech portfolios, including 6 plus gigawatt solar projects and 25 plus years of experience with leading large industrial companies. So it's a pleasure to introduce you to Mr. Basant Jain. Mr. O.P. Ajmera, who's the Group CFO and CEO for the Hydro and Wind segment. Mr. Ajmera has been with the group from inception, I would say, and he has led the entire hydroelectric power business of the company, which has enabled us today to get to the green tech platform. Mr. Ankur Khaitan, who is the CEO of the advanced battery material, the anode project in the company called TACC. He has 17 plus years of experience with 12 plus years at HEG Ltd in its graphite business. And later in the presentation, you will come to understand why that is very, very important in this particular framework that we are trying to work on. Mr. Hiren Praveen Shah, who's the CEO of RE Plus, the battery energy solution. He's a very, very passionate battery man. That's all I can say. 23 years plus in the battery segment and new energy solutions with having worked with pedigree companies like Panasonic and Delta and led ESS projects for Geo, Tata, AWS, and Indian Oil. He breathes and eats, I think, BESS. You have Puneet Anand, who's the Group Strategy Officer, who is helping us create a very robust platform in terms of efficiencies on taxation, in terms of new business ideas. And Puneet's experience has been 16 plus years of experience. I think 14 out of the 16 being in Ernst & Young at very, very senior positions. Mr. Salil Bawa, who is the head of investor relations. Thank you, Salil, again for helping Puneet and everyone at SKP organize this call. Salil would be based out of Mumbai, so he will be your point of contact for any information that you need from the company. He has had 25 plus years experience in this business with companies like DHFL, Edelweiss, and Wellspun. Mr. Karunesh Chaturvedi, who's the head of the corporate affairs. He has over 30 plus years in corporate affairs and strategy, advocacy and government affairs. He's been the ex-head of corporate affairs, Wellspun India, Wari Group, etc. Miss Indu Mehta, who is the Chief Sustainability Officer for the company. Her resume includes 30 plus years in sales and marketing across industries and has been a director with us in our other companies like Bhilwara Infotech, etc. And one of the newer members of the team, Mr. Ranjan Sarkar, who has a lot riding on his shoulders as the Chief Human Resource Officer for the company with 25 years in HR leadership in large Indian companies and MNCs, including being the ex-president of HR in Exide Industries. So with that, I think I will end my part of the presentation, and I'm around for any questions or answers that we'll have after the presentation. And with a promise to everyone that whatever we are trying to build over here in HEG Green Tech is absolutely above board and will carry the legacy of the LNJ Bhilwara Group forward as its fourth pillar: textiles, graphite, power, and now the new generation. So Basant, over to you. I think Basant will do the talking from now, and rest of us are available on the call. Basant, please.
Thank you very much, Raju, and a very good evening to all. Thanks for taking out time. Raju has already given a good introduction. Let me just try to explain these businesses in a little bit of details. As Raju mentioned that we are building India's first technology-led integrated green tech platform, which primarily focuses on storage as a technology and all other businesses around it. To begin with, one of the most promising business which we see in our portfolio is our advanced battery material vertical, wherein we are setting up a 20,000 ton annual plant, which will produce one of the highest quality synthetic graphite material for lithium-ion batteries. As we speak, the plant is already at an advanced stage of construction near Indore. Apart from this, we are also, as Raju mentioned, that in the RE power present through hydro assets and storage-led IPP and battery energy solution through RE+. In all three businesses, India is going to see a massive capacity addition over next few years. And the regions which Raju articulated, how the India is decarbonizing its energy sector, trying to make India as a self-reliant, and hence lithium-ion batteries, battery materials, battery storage solution, and then the RE IPP, they will all play a significant role. And we want to be a sizable player in all these segments. Next one, please. Next. So why anode material? As we all know that the today lithium-ion battery technology has overtaken over any form of the technology, whether it's and it has emerged as one of the most promising technology for storing the energy for a variety of reasons. One of the biggest reason, of course, is the falling prices. The price is tumbling, from $450, to now almost like $60, and that has led to the increased penetration. Because of the increased penetration of batteries across all segments, be it electric vehicle, battery energy storage, and hybrid applications, there is a significant increase in the anode material demand, which from current level stands at 1.5 million ton. As per the projections given by the leading research firms, this demand is likely to reach to about 4.5 million ton. Now, typically, 1 gigawatt hour of battery requires about 1,000 ton of anode material. That's the kind of thumb rule. Now, as you mentioned that India is going to see a capacity addition of almost 150 gigawatt hour over next 4 to 5 years time. That will entail a demand of almost 1.5 lakh ton in India. Apart from this, a lot of global cell OEMs are also looking at manufacturer outside of China. As we all know that the China today controls almost 97% of this synthetic graphite supply globally. And from a de-risking point of view, all these European and American and even Asian vendors are looking at suppliers who can deliver high quality anode material at a competitive price. And we are here to set out and meeting this requirement. Apart from this, the PLI scheme, which mandates the domestic value add starting from 25% to going up to 60%, these local Indian cell manufacturer will be required to source battery materials locally to meet this DVA. And we believe anode material will be the first one to be adopted in this direction. Next one. What is our right to win? This I think I already explained. So we all know that how Indian cell landscape and global cell landscape is going to be a factor for us to be confident about this vertical. Next one, please. What is a right to win? As we all know that we are one of the leading player in the graphite electrode space, having a plant which delivers these anodes at the world-beating cost structure. While one of the most complex process in the graphite electrode is graphitization. This is a process which entails a lot of technologically sophisticated process control, and we are the one who have perfected this art with the experience of 50 year plus in this space. The process for manufacturing the synthetic graphite, for battery anode material, it's similar, if not same, to the process being followed, in the graphite electrode. And even the raw material which is required is same. Taking the expertise of our HEG Limited, we have decided to get into the synthetic graphite manufacturing. And what we did, we ensured, like in HEG, that we have access to the best technology, which can help us compete, with the Chinese. As we all know, the Chinese are already ahead in many aspects, but given our experience and expertise, we are very confident of ensuring that we also deliver the material which meets the requirement of the global OEMs. In this direction, we already set up a 200 ton of pilot plant almost 2 years back. Next slide, Puneet. The idea behind setting up this demo plant was that how do we really make all these global cell OEMs comfortable? Because we don't want a situation where we set up a plant and then we are sending the material for certification. It would have delayed the, I would say, commercialization of the plant, of the material. So this 200 TPA plant is absolutely identical in terms of process flow, and then the technology which is being used for this 20 KTPA plant which is being built. So the material produced by 200 TPA plant has been sent to almost over 20 leading global cell OEMs. And these cell OEMs have tested our material. And I'm pleased to say that majority of the cell OEMs have been extremely pleased, happy with the material, both in terms of the material specifications and quality. And now we are at a stage where we are now discussing with them the potentially the terms for the long-term offtake. Next one. There is a lot of innovation which is happening in the battery anode material. As everybody is chasing, for the higher energy density and faster charging time, there's a lot of elements which are being added to the synthetic graphite. One of them is the silicon. We are working on manufacturing our own high quality silicon material, which, if it is doped with the anode material, will increase the energy density by almost 20% and also improve the charging time. Likewise, we are also at a very advanced stage of producing a quality graphene, which again, if added to the battery anode, will further improve the charging speed and also prolong the battery life. In terms of a product mix, we will be catering to the price conscious ESS segment, and then the mid range and high range EVs, which are premium segments, where the energy density and charging speed is the primary criteria, and hence the silicon doped and graphene doped anode material will come into play here. Next one, please. As you could see here, some of the pictures, this plant is spread across 100 acres, already at an advanced stage of construction. Overall progress of the project is 30%. Bulk of the procurement process is complete, and over 90% engineering is also over. We have built this plant with the aim of expanding it to 30 KTPA within the same premises at a very optimal investment. This will further reduce our capex per ton cost and also reduce our OPEX, thus enhancing our competitiveness further. We aim to expand this overall capacity to 60 KTPA by FY32. This decision to invest this additional capex will be taken once we stabilize our initial 20 KTPA plant. Next one. What is our go-to-market strategy? As I mentioned, a team is already in touch with almost every single cell OEM. Some of those names are supplying to the marquee electric vehicle EV OEMs, and even the company which are making the battery for all segments, whether ESS or hybrid. The team is already in advanced stage of discussion with customers, which could potentially offtake 30,000 metric ton, which is more than the capacity which we are setting up in phase 1. Next one, please. As I mentioned about graphene, we all know that graphene is considered or known as a magic or wonder material. Apart from utilizing part of the graphene, in our anode material to enhance its longevity and also improve the charging rate, graphene also has some of the unique applications. As we all know, graphene has a strength of almost 200 times than steel. It is one of the lightest yet strongest material available on Earth. There are very interesting use cases of graphene, right from cement to the textile to paint and as I mentioned, anode. And we already piloted and experimented in cement and road infra, where we got a very encouraging result. There is a very good economic case for doping a very tiny quantity of graphene, which improves the anti-corrosion properties of concrete, and also reduces cement consumption significantly. In textile and paint also, there have been very encouraging results. So over the next few months, we will complete this testing, and then we intend to set up a 4,000 metric ton of graphene derivative plant within the same premises where this anode plant is coming up. Next one. Battery energy solution. RE Plus is a portfolio company, which provides the battery energy solution. We all know how battery energy storage demand is going up both in India and globally. As energy becomes, as more and more solar is deployed, and people are finding it very difficult to really, or there is a massive surplus of daytime power due to excess solar capacity. Solar is now becoming an integral part of all projects, whether it's in India or Middle East or even Western world. Next one. Even in the EMEA region and Middle East, again, we have seen a multi-gigawatt hour of single location project with the power backup ranging from 2 hours to 6 hours. There have been some cases in Middle East where 100% solar is being stored and then being discharged in the evening hour. At RE Plus, we are fully focused in developing solutions, a plug-and-play solutions, which will ensure the on-site installation time is reduced. A solution can withstand all extreme weather conditions, whether it's India or even Middle East, where the ambient temperature goes up to 50 degrees Celsius, and also ensure that the life of the battery installed is adequate enough for people to get the economic returns out of their projects. Next one, please. As you could see here, we have commissioned 100 megawatt hour plus capacity, both within India, and we have done some marquee projects in Saudi Arabia and DRC, which reflects the confidence our customers have about our offering. We have over 2,000 megawatt hour of capacity under execution in different parts of the world. As I mentioned, that the India and MENA region remains a key focus area, and we already have an office in place in Dubai. And as we speak, we are already in discussion with all Dubai-based IPP who are working in both MENA as well as the other African countries. And we will soon, we should be able to secure a good chunk of orders from these markets as well. Next one. In case of EV, as we all know how EV penetration has really gone up significantly in India. As we speak, the growth rate in the two-wheeler, three-wheeler, and buses and trucks, especially these segments, it's a 20% plus CAGR, and I'm pleased to share that today we have the AIS certified battery pack for all these applications, and in many cases even certified by ICAT. Some of the battery packs homologated, with the buses and three-wheeler and trucks. We see this as a massive growth area, and RE Plus is well positioned, to be a leading partner for these EV OEM player. Next one, please. In case of hybrid applications, where most of the applications, the lead acid batteries are paving the way for lithium ion, both from the price standpoint and overall life point of view, and also from the safety and I would say the overall energy standpoint. And there are a lot of interesting use cases emerging now, especially for cases like your data center, where you need to have a very fast response battery solutions, and we at RE Plus are well positioned to cater to the needs of emerging segments like drone, data center, and even telecom tower, where most of the earlier installed lead acid batteries are now being replaced, and now lithium ion batteries are now becoming a norm there. Here again, we are the industry's first, in fact, India's first battery solution provider, where our packs are certified by TSEC. That means we can sell our packs to some of those very, very demanding markets, even European market. And we are also working on solutions for the high C rate batteries, as I mentioned to you, for especially for the data center and drone applications. Next one, please. RE power generation and solar BESS. We all know that how the whole Indian RE landscape has changed. The chart towards your top right illustrates the current situation of RE in India. As you could see, from almost 10-11 a.m. till 4 p.m., the RTM, which is the real-time market, for the renewable, the price points falls to practically zero. That means there are very few takers because of the mismatch in demand and supply. What is also concerning is that even though the prices have reached to a near zero level, the overall volume cleared in RTM market during these hours is only 20-25%. That has set the panic button among the utilities. So if you see, none of the utilities are now going for a standalone solar projects anymore, and they are being very reluctant to sign even the earlier awarded capacity because of this reason only, because they are obligated to buy these units at whatever 2.5 rupees plus, whereas they are not able to find customers. So now almost every single project in last 18 months, if you see, is now integrated with the BESS in some minimum of 2 hours, and in some cases even 4 hours and 5 hours as well. And even a lot of hybrid and RTC capacity has been auctioned, which requires a significant chunk of BESS to be part of the overall project mix. In addition to this, we have also seen the DSM, which is a deviation settlement mechanism, charges going up significantly. Government is now making the DSM provision for RE almost at par with the thermal. That means you have to if you do not deliver the scheduled energy, then you will be penalized in a heavy manner. Now, in many cases, the DSM penalty is very, very steep in excess of 1 rupees. That what it means that all RE developer will have to forcibly integrate storage, because you can't avoid the I would say intermittency of power or the variability in the weather. Hence, the storage is the only way to go. And we all know the banking provision in almost every state is now going away, because all discoms are now facing losses. So they don't want to give banking as a artificial storage capacity. So now there is a more of a TOD based settlement. So all these factors are driving the demand for BESS storage in a massive manner. Apart from this, as you know, there are a lot of policy tailwind. While ISTS waiver for the conventional RE is now being withdrawn by 2028 fully, but but the Ministry of Power has kept the waiver extended for the standalone BESS up till 2028, and we believe it might be extended further to improve the penetration. There is a BGF provision also, which has also led to the reduced cost of BESS for the discoms. There are market dynamics, as I mentioned earlier, that the battery pack price is falling, and then as the TOD base, the banking provision moves away, and then the discoms are ensuring that your RE capacity is limited to your connected load. So without storage, you can't really have a meaningful, I would say, RE penetration. So if I were to look at the standalone pure solar, it's only 12%, whereas with solar and BESS, you can go up to 63%. So all these are factors which are leading to the higher adoption of BESS projects in India and globally. Next one, please. Now, these are just now mentioned. So if I were to look at even the economic case for it, if you look at the peak grid power rate, which is after 6 p.m. And up to 10 p.m., it is invariably 9 rupees in majority of the states. So even if I were to look at the current solar rate and then the LCS or BESS, you are in the money. So the cost of solar plus BESS is lower than your grid power. And this grid power, by the way, is a brown power. And then you get a green power at a price lower than the grid power. So this is where the most of the discoms and even C&I consumer primarily are now more and more inclined to have solar plus BESS to meet their requirement. Next one, please. As I mentioned that India will see an annual addition of close to 50-60 gigawatt hour per annum, both in utility as well as C&I space. What is our right to win? We have a very strong IPP team. The team, some of the very senior people from Statcraft have joined us, and we also built a very experienced team over the last couple of months. We have a very strong, technical know-how through RE Plus and TACC to ensure that we choose the right kind of batteries. And the supply chain is I would say, ensured through RE Plus. So all these factors give us that extra edge over competition. Over next 5 years, we intend to build a total portfolio of about 5.9 gigawatt hour in BESS and about 3.7 gigawatt hour of in the solar. And then the philosophy which you're going to follow here, as Riju said, that we'll target 16% plus IRR, which we are very confident using our given our expertise, and we will follow the capital recycling model because we don't really we don't see ourselves becoming a long-term asset owner in RE space. Once the project is stabilized, it is delivering the generations as per the design. Then we will sell it to some of the InvITs so as to improve our overall returns going forward. Next one, please. In hydro, as I mentioned, that we are one of the pioneer in this space, and then the performance of both Malana and AD Hydro speaks volume about how the quality assets should be built, and these are today considered as a role model in Indian hydro energy sector. As Riju mentioned, we operate 2 plants, very high quality, delivering consistent EBITDA. We have proven a lot of naysayers wrong, where a lot of people said that you should really contract this capacity on a long-term basis. But the management at that time took a decision to keep this entire capacity on a merchant basis, and now we are reaping the dividend of this strategy. As we speak today, these projects deliver almost 370 plus crore EBITDA and a free cash flow of 300 crore plus. I mean, these are all like, both the projects have a reservoir. So hence, we take advantage of generating during peak hour and getting extra that revenue. Next one, please. This is a synopsis of the capex which we have planned over next 3 to 4 years. By end of F27, we intend to deploy almost 4,300 crore capital. Bulk of it is going in anode material and RE power generation, and then taking it to overall capex of 7,700 crore. As I mentioned that while you see a big chunk of RE capacity coming here, but using a build and flip model or capital recycling model, we would like to minimize our capital outlay here. assuming 30-70 capital structure, the total equity requirement comes to 2,300 crore. Hence, we are well capitalized, for this kind of growth plan, which we have set out on ourselves, for next 3 to 4 years time. And thank you very much. With this, I will end my presentation. Now over to now Raju and Salil and team, and then maybe open for questions. Raju, you may like to open this floor for Q&A.
No, I think you've summed it up well. If I could just add a couple of things from the management side. I mean, from my side, the absolute vision, everything is absolutely clear in my head that we have to be following the highest corporate ethics possible. We will maintain in this particular company the best-in-class team. So every business that you are seeing that Sanjay just spoke about, all the 4 different SBUs right now, although they sound like we have 4 different businesses within the company, but all 4 of them are being headed by very, very strong individuals who are the best in class in that particular segment. So we will continue to focus on team building. R&D is one area that we would wish to spend a lot of money on as a company because contrary to our existing businesses of textile, graphite, etc., R&D has to be a major portion if we have to stay ahead of the curve. So, I mean, these are the 2 or 3 guiding principles. And of course, the principle of scale on how to scale up this particular business is something that we will be looking at as 4 different SBUs operating within the confines of HEG Greentech as a company. So glad to take any questions. I think we have all the CEOs of the existing businesses over here. So glad to answer any question that anyone may have.
Thank you, Mr. Junjunwala and Mr. Jain. Friends, we open the floor for the Q&A session now. Anyone wishing to ask a question, please raise your hand and we take it up. A request if participants could introduce themselves before asking the question. We'll take the first question from Amit Lahoti. Amit, please unmute yourself and go ahead.
Yes, hi, good evening, team. This is Amit Lahoti from MK. Thanks for hosting this presentations. I have a few questions. The first one is that in slide 4, how do we arrive promoter group interest of 61.92%? Does it take into account the swap ratio given by the valuers?
I think Puneet, you could answer that question.
Hi, Amit. Good afternoon. So, Amit, the shareholding of promoter has increased because the BL, which is getting merged, it is 49% owned by HEG and 51% was owned by promoters. So they are letting their shares of BL and in lieu they are getting shares of HEG Greentech per se. It is as per the swap ratio given by PwC and vetted by ISEC.
Right. So what is the swap ratio here?
It's 8:7. For every 7 shares, they are getting 8 shares.
Okay. The second question is the acquisition price for Fata Bune power plant that you are about to acquire. So when is it expected to get completed and what is the acquisition price?
So acquisition price, if I can say that, I mean, that's kind of confidential between us and StatCraft right now, but I can tell you it's not anything very significant. In fact, we are getting a good value out of that because the project has a lot of built-in stuff in it when it comes to the tunneling and the material that has been ordered. So I think we have to wait for the next 4 to 6 months for all the environment clearances, etc., to happen. And after that, I think we can quickly build the plant up in the next 2.5 years. And it'll be up to us at that time to decide whether to keep it open as a merchant plant or to tie it up as at the 16% return on equity kind of a fixed plant.
Okay, got it. And then few questions on TACC. How much capex have we spent on this anode project so far, given that our progress is currently at 30%? So can we say 30% of capex has been spent, or it is little more or little less?
I'll ask Ankur to take that question. Ankur is leading TACC and the entire anode project.
So we have committed more than 50% of the capex, which will be spent over the next 15 months now, and all the major commitments regarding the procurement is done, and of course the engineering, which is also a very critical part of it, is completed.
Okay, so we have spent 50% already on this.
In terms of commitment, yes.
Okay, but in terms of actual cash outflow from the balance sheet, how much is that?
In terms of cash outflow, it will be close to 30%, depending upon
30%.
the various terms and conditions. Yeah.
Right. The second thing which I wanted to check on the same TACC project, the capex per ton, which I calculated for 20,000 tons of works out to $12,500 per ton in terms of capex intensity. And whereas the selling price for this anode is about $7,000. So this implies asset turn of only about 0.6 times. So with that economics, can we still make 20% ROCE, or is it going to be little possibly aspirational at this stage?
No, it is not aspirational, because when you see the overall market, if you see the market outside China, because as we covered in the presentation as well, that today the most of the market is concentrated within China. And when we are speaking with various companies outside China, which does not only include the Indian geography but other geographies, including Europe, US, and the Asian markets, then they are very much willing to work with non-Chinese players. And with us having having a very rich background in terms of graphite and carbon knowledge, as well as operational factors of that, today we are in very advanced discussions with the key players in the market, and which gives us a very positive edge. So all the demo plant material which is going to the customers, and the kind of responses in terms of product quality, as well as willingness to offtake the material for the next 5 to 7 years we are getting, is very positive, and it doesn't give us any reason to think that we would have any ROI less than what you have mentioned right now.
Right. So eventually we will be looking at a price hike from the current level of, say, $7,000 to $8,000. Is that what you intend?
Yes, definitely.
Right. And the last question here is from the perspective of demerger, that we have current consolidated net debt of about 500 crore for the entire HEG Limited business. So how are we going to split this between the graphite business and the green tech business at the time of demerger?
I think Puneet would.
Hi, Amit. I'll take this question. So, Amit, at the HEG level today, we are not on the debt side. Net, we are positive. The entire debt which you see in the HEG balance sheet is primarily for the graphite business, and it will go with graphite.
So HEG Green Tech exits at a zero net debt initially.
So,
is that right?
Technically, you can say yes, but all the debt which is been taken for TACC will go with TACC. Other than larger debt is towards the HEG graphite business.
But could you quantify the amount what will remain in the graphite business in terms of either gross debt or net debt?
So I think it will be a net debt. It will be still a debt-free company. If we do the division. So basically, HEG Green Tech, it's a 750 crores amount committed by the board for TACC. Plus, they have certain surplus asset which are being left in the company when the merger is going on with BL. Other than that, graphite will take the additional cash plus the investment which is in GrafTech and the working capital limits. So since the scheme appointed date was 1st April 2024, so by the time it gets implemented, I don't see a larger portion of debt which would be in HEG graphite also.
Got it. Thank you so much. Thanks for the
Thank you.
answers.
Thank you, Amit. We take the next question from Dhananjay Bagrodia. Dhananjay, please go ahead.
Yeah, hi. This is Dhananjay Bagrodia from Alpine. Thank you for this presentation. Just wanted to ask you, so the company which you're acquiring, the BEL one, which will be merging, what were the revenues of that company?
Didn't understand your question. Dhananjay, can you
The
repeat?
BEL, which is owned 49% of the company, what were the revenues of that and what multiple would that be valued at?
So the valuation is done by an independent valuer,
Sure.
which is PwC,
Uh,
and the BL today has around EBITDA of 400 crores, which is
Okay.
getting merged into this
And
company.
what values are getting merged at?
At what value?
Mm,
The value is around 3,100 crores,
So around 8 times EBITDA.
around 8 times EBITDA, you can say.
Okay.
But it also has some cash. So net cash, if you see, the numbers will be different.
Okay.
So the entire calculation and the valuation has been already been uploaded with the stock exchange. You can go through that.
Sure. And regarding the advanced battery material business, so if the anodes are going to be there, then the graphite, or sorry, HEG standalone business and in this business, is that right? Or how will that be done by the management for anodes going ahead?
So what the demerger process is, we are only demerging the existing graphite business.
Hmm.
The anode business will be in HEG Greentech, which is
Hmm.
housed in a separate entity, which is TACC Limited.
Okay.
That will remain in this company, and BL will get merged in this company.
Okay. But as a pure play anodes, that will stay in the earlier business only, right?
No, so
So, Puneet,
anode.
if you can put up that sheet of HEG Greentech structure, then I can quickly explain in one.
Puneet, if you can tell me which slide. Okay, great.
So, Dhananjay, I mean, just to reiterate, there will be two companies post the demerger. One will be
Yes.
the graphite company, which will have the 100,000 tons of graphite electrode business.
Yes, yes.
And the second company will be HEG Greentech, which you see here.
Hmm.
Under HEG Greentech, you will have four different entities.
Sure.
TACC, which is 100% owned by it, which will have the active anode materials to start with. Then the solar and BESS IPP that Basant spoke about, in which we are
Yes,
going
yes.
in for the IPP and the CNI kind of projects, and we hope to do more than a gigawatt a year
Sure.
for the next 3 or 4 years. That is 100% again owned by HEG Greentech. RE Plus is the battery storage company where we will manufacture high quality BSS systems and implement them along with the EV solutions. That company is owned 74% by HEG Greentech, and the balance 26% is with the founders of RE Plus, who are continuing to manage that particular business along with HEG Greentech. And then you have the two power plants, which are Malana and AD Hydro, which are 100% owned by HEG Greentech. So
Sure.
HEG Greentech as a company owns 100% of the anode material, your IPP business, your hydro business, and 74% of the battery manufacturing business.
Sure.
And
So,
HEG Graphite, as you're seeing on the right-hand side of the slide, has 100,000 tons of graphite electrode, which also we are increasing by 15,000 tons, and a 10% strategic investment in Graftech USA, which is the world's largest graphite electrode company.
sure, sir.
That is it.
No, very well done. So just anode and electrode, just those will be considered, even though they're the same operationally, also they'll be separate, or are
So
they?
they are absolutely separate. HEG Graphite is our plant is situated in a place called Mandideep near Bhopal.
Hmm.
And this new TACC plant is situated in a place called Devas, which is near Indore. So just
Okay.
to understand what Basant was also trying to say, that the core of the business, which is graphitizing, when you convert the carbon from graphite, That technology is something that inherently at TACC as a company has inherited from HEG Limited. And we've actually taken physical people on board of TACC who have had years and years of experience of managing graphitization. So the companies will be totally separate. The locations will be completely separate. Yes, the same raw material will be bought for TACC and the graphite electrode, where we will definitely see some synergies. And the technology, although this is different, there you are producing long graphite electrodes. Here you are producing carbon in the purest carbon form, in the purest talcum form, for lack of a better example. But having nothing to do with each other except for common promoter shareholding.
Also, Dhananjay, I mentioned to you that it is similar process but not same. The graphitization process, so that is where we have an edge. And that is what I said it's a right to win. So the process of graphitization here and here is pretty similar. But then as Riju said, here we are making those long, those electrode which are used in electric arc furnace, and here this anode material is being in a powder form, which goes in making the lithium-ion battery anode.
Sure, this is very helpful. And lastly, what is the total capex we require for all the HEG Green Tech entities?
So if you see my slide, the slide, can you just show that on our slide? So this is where I explained that up till 27 we have set out a capex outlay of 4,300 crore, and by F30 accumulated 7,700 crore.
Okay, fine. Thank you. Thank you so much, and congratulations again.
Thank you, Dhananjay. We'll take the next question from Abhishek Getam. Abhishek, please unmute yourself and go ahead.
Yeah, am I audible?
Yeah.
Yes, loud and clear. Please go ahead.
Yeah. So on slide 3, we see that we own 100% of TAC, but I believe we have done a 500 crore capital raise with Singularity in May of 2025. So what is the status on the capital raise, and at what violations did we raise that capital?
Puneet, can you answer that? I don't think there are any violations over there. But
I'll take the question.
The structure is a little difficult, different, so you can explain that.
So Abhishek, I'll explain you. We haven't raised money at the TACC level. So if I just show you the slide, give me 1 second. So if you see on the left, there is an entity called Bhilwara Energy Limited, BEL. So the investor has put the money in this. They have given the premium on the valuation. They have put the money at around 3,600 crores in this company, whereas the company was valued 3,100 for the swap, and they have invested 500 crores in this company. Since they are also sitting as a shareholder in this company BEL, which is getting merged into HEG Limited, pursuant to that, they are getting shares of the HEG Green Tech Limited. If you see on this next slide, so out of this public shareholder of 38%, 12% is the investor holding, and the remaining 26% is held by HEG public shareholder. So there is no dilution we have done at the subco level. The idea is to have the structure concretely in place so that tomorrow, if we want to do an independent listing of fundraise or any other entities, we can do that.
Understood. Another question was, sir, on the demand of 1.5 lakh ton of anode. If you could, briefly segment that demand across categories, if possible.
Ankur, you want to take this part?
Yeah, thank you, Puneet. So when we're talking about the Indian market, then today the Indian market is mostly coming on the ESS side, but there are players who are working across the chemistries on ESS as well as on the EV side. So if we talk about absolutely on the short term, then of course the ESS is the fastest growing. But when we talk about the complete 120, yeah, Puneet, that slide would be good.
Sorry,
when we're talking about 120,000 tons of demand in India alone, then it would come both from ESS as well as EV side.
Okay, but in short term, what is like the demand number on ESS and EV?
So in short term, when we are talking about next couple of years, then the majority part would be on the ESS side, because when the current companies which are coming ahead, they are focusing more on the ESS side, and of course the demand is going to start with less than about 35 to 40 gigawatt in India, but it is going to grow very rapidly, because just in the next 3 to 4 years, all the plants which have done their all the research as well as their development work over the years are going to come up with their respective capacities.
And also, having said that, if I can add, Ankur, there's a huge traction that we are seeing from the global markets. Because
Yeah.
now, till now, like we mentioned that more than 90 to 95% of the battery material anode is coming from China. So we are seeing a lot of positive development with all the European, US, and other countries that manufacture cells or are having plans of manufacturing cells. They all want to buy their anode, which is around 15% of their overall battery cost. They want to split it between China and other countries. And if we talk about other countries, I think apart from Indonesia, we would be the only plant that would come up first as far as the anode product is concerned. So, I mean, and that is where our, kind of focus is to sell more and more on the EV side, because that is where the higher paying customer is. ESS customer is on the lower end of the side. So our target is that 70% of our sales should be towards the EV side and only 30% towards the ESS side. And ultimately try and sell as much of this product in India once the cell companies come on board in India, which is taking longer than this expected time.
Also for EV and these high-end
Abhishek,
applications.
Abhishek, may I request you to keep this as the last question because there's a long list of participants waiting.
Okay, if there's room, can I ask one more question?
Yeah, please go ahead.
Yeah. Okay, thank you. Another question was, so what are the cost advantages in India versus China for graphite anode? And what are like the cost economics of India versus China? And with Epsilon and Himadri also adding capacities, how do you see the demand panning out also, demand supply structure panning out?
Ankur, maybe. Yeah.
You can take this.
Yeah. So first, I'll talk about the cost economics. So when we are talking today, the very good part about Indian ecosystem is that right from the center to the state, there is a massive support by the government. So overall, when we see the economics, then on a EBITDA level, we are either better or at par with China. The main component of the cost is the power cost. And again, because we are getting some very good support, both because of our own facilities, plus having a good power tariff here, we are competing very well with China definitely at an EBITDA level. And when you talk about the overall supply situation in India, then with the kind of demand we are seeing, we are talking about 120 to 140,000 tons. So when we're talking about these kind of numbers, then we don't see an issue with other competitors also coming up in India. In fact, it is good for the overall Indian ecosystem to have a larger capacity in India, because when you go a little further with the cell companies, then the PLI scheme makes cell manufacturers mandatory to go up to 60% of the localized material. So the more you have a local production, the more cell people will be encouraged to ramp up their capacities and be dependent on the local suppliers. So it's a complementary situation, in fact, at this moment of time.
Understood, sir. Thank you.
Thank you.
Thank you, Abhishek. We'll take the next question from Jatin Damania. Jatin, please unmute yourself and go ahead.
Good evening, sir, and thank you for the opportunity. So just wanted to understand more on the BEL. If I'm not wrong, you indicated there's a 400 crores of the EBITDA, but earlier AD Hydro was a JV of BEL through a Malana. And lately we purchased the remaining stake from our joint venture company. At what valuation did we did that acquisition?
Ajmera ji, can you take that question, please, since you've been the architect of that side? I can answer, but I'd rather have you.
Yeah. See, this 49% stake we have acquired from Statcraft with the valuation of precisely 1205 crores.
1,200 crores.
Yeah.
So that means you are valuing
And
the AD hydro.
no, actually, let me explain you. We had a first right of refusal with the joint venture agreement, and we exercised that right to acquire this stake at 49% for 1205 crores.
Right. So in short, you are agreeing the value of near about 2,400 crores for the AD hydro. And when you
Not for AD hydro, it's a combined Malana and AD both put together, both the hydro assets.
Both the hydros, but sir, BEL used to hold 100% in Malana and Malana used to hold 51 in AD hydro, right?
No, sir, no. BEL had for 51% only in Malana, and Malana had 100% of AD hydro. So basically, we had a joint venture with Statcraft 51-49 in both the companies together.
Okay. So,
Yeah.
So now when you are valuing the entire company, when you divested or you raised that 500 crores, valuing BEL at near about 3,600 crores, which is a premium of 500 crores, does that indicate that the other four business, which is currently not generating any revenue, we are valuing that at around 500 crores of revenue at this point of time? Is it fair to
No,
assume?
actually, hydro assets itself is valuing higher than what we have acquired.
I'm agreeing that because
Yeah.
BEL, when you divested or you raised 500 crores from Singularity, you indicated that 3,600 crores of the valuation for that BEL, where you have only two operating assets, which is Malana and AD Hydro, which is giving you 400 crores of revenue, and you are giving an 8 times, which gives near about 3,300 crores of the valuation. So remaining 700, 800 crores is for your solar, BESS and tech business. Fair to assume that?
Yes, you can assume that because tech was also valued at a particular valuation, and the battery business
you can
was
speak
under
about the cash in BEL's book
and
also,
cash.
that we'll have to reduce from that.
So what is the cash in the book at BEL level?
At that point of time, when the valuation was done, it was about 250 crore was lying in the company.
Okay. And so once our entire capex is done of 7,700 crores across all the business vertical, what sorts of IRR one should look in the consolidated entity?
I think it's a 4,000 for 300 crore is the capex.
That's stage one, and then after that, after the CNI projects, like Basant mentioned, I think we are not chasing the regular IPP or the regular tenders that are coming every day. We are only targeting a 16 to 20% plus kind of this thing, which will be led primarily by the CNI segment. So as if you see all the four different businesses combined together, we are aiming for a healthy at least 20% IRR across the four different businesses. They could delay from time to time or year to year, but on a steady flow basis, all the four business should be generating a healthy 20% IRR.
And post the completion of the phase one, what should be a steady state EBITDA for us other than this 400 crores that will generate from the hydropower?
I think Puneet, would you like to answer that?
No. Well, I mean, we haven't worked out the number. We are, because there are multiple things, because we are following the asset recycling model. The EBITDA number and all will not be that relevant, because bulk of the IPP assets are being, I would say, flipped. So, but if you were to look at out of these four businesses, RE plus will require a very limited capital. So there the best mode of gauging the performance is not IRR, but the more like ROCE, and we believe RE plus will really generate a very healthy ROCE. And IPP business is more like an IRR game, and I agree, which where Riju already clarified. And then you can imagine then the hydro we are generating 300 crore plus cash and 370 crore plus kind of an EBITDA. You can then calculate there, and then The tech business, we already mentioned the 20,000 capacity, ASP of $7,500 plus, and the capex of 2,200 crore. So one can calculate now the overall financials.
But I mean, I agree with what you are saying, but since our capacity is going to start from FY27, which is the second quarter, definitely that should be, I mean, we're estimating that there could be some amount of the greater benefits will come from the BESS. Because when we generally talk to BESS players, they indicate near about a 4 lakh rupees of EBITDA for per megawatt. So we are also working on the same number, or probably we are on the little on the higher side.
When you say, sorry, 4 lakh rupees EBITDA per megawatt hour?
Yes, for BESS. Is it fair to assume it, or probably the numbers?
Well, honestly, I don't have the number handy with me. You know, I don't know whether we need to know somebody else has this number, but we can come back to you, on this.
So last question, other than Singularity,
Jatin, may I ask you to join the queue, please?
No, last question. Navin, last question.
Sure.
Other than Singularity, who are the other key investors who are invested in the BEL? If you can name them.
So right now we only have Singularity as the investor. And today, I mean, with the business plan that we have in place and showed you, I think we are very well funded because the cash that HEG is leaving behind, plus the surplus of the hydro assets, and the another 300-400 crores of EBITDA coming in the next 1 year or two, and 500 crores coming in from Singularity will give us enough equity for this, around 5,000 crore of investment. And later we will see, I mean, then your hydro assets will also, then your, sorry, TACC will start performing and throwing out EBITDA. Your IPP projects will start throwing out EBITDA. RE Plus will start throwing out EBITDA. So then we can, we'll be in a position to decide, I think, in the next 12 to 18 months whether we need any outside funding or we can do without any outside funding. But I think today, I mean, Singularity is the only investor.
And in RE Plus, who holds 26%?
RE Plus was founded by Hiren, who's on the call right now. And between Hiren and their partners, they own 26% of RE Plus.
Sure, Rijuji. Thank you. Thank you for answering all the questions.
Thank you, Jatin. We'll take the next question from Rajesh Majumdar. Rajesh, please go ahead.
Hi, good evening, gentlemen. Am I audible?
Yeah.
Yes, you are. Please go ahead.
Hi. So I had a couple of questions. One was on the raw material. See, in the case of your core business, electrodes, we have a raw material constraint due to which there can't be any global capex, and there seems to be some kind of capacity constraint there. But what is the raw material here in anode? Is it calcium petroleum coke, coal tar pitch, any of the raw materials which are amply available in the market? Number one. And secondly, if you look at the China anode capacities, they are well over 3 lakh tons or 4 lakh tons. And so what kind of competitive edge are we really talking about? Are we expecting something like ALMM coming in the procurement process, which can give this kind of competitive edge? So that was my first question.
Ankur.
Yeah, thank you, Rajesh. So coming to the first question that about the raw material, so there is a slight difference between the raw material what we are using for anode and what we are using for graphite electrodes. So while in graphite electrodes the material used is 100% calcined, in case of anode the material used is green. So when we are talking about green, then we are talking about green needle coke, green petroleum coke. Now, as per today, we have evaluated all the major global players, whether it is European, American, or Japanese, and we are qualifying our material based on different kinds of coke. Of course, there are a lot of Chinese producers as well. But in today's scenario, when we're discussing with various customers across the globe, then there are a lot of players who want absolutely a non-Chinese source. So we are prepared for that. But if somebody is agnostic, they are indifferent towards Chinese or non-Chinese, and we are prepared for that as well. But coming to the level of quantities available in the market, so the good part is that for green coke, the feedstock is completely different. The feedstock management is completely different. That is why, as per the capacities, what we have planned now as well as in future, we are not seeing a very big challenge in this. And with HEG experience over the last 50 years, with HEG relationship with these companies over the last 50 years, we are very confident and we are very sure that after all our discussions, we are even able to have a long-term agreements with them depending upon the kind of requirements we have from the cell companies. The second question.
And who are the suppliers of green pet coke? Which are the companies?
So
which are the areas?
the supply names are common as per the electrodes. Outside China, the supply names are common. In China, there's a slight difference, but outside China, all the names are common.
Okay. Yeah, second part you were addressing. Yeah.
So second question, yes, when we are talking about the kind of restrictions in India, so it's not only about India, but it is about a geographical restriction. When we talk about, even today, when we talk about countries like United States, then there are two very critical points which are coming here when it is coming to a non-China supply. You must have read about foreign entity of concern. And not only about foreign entity of concern restricts Chinese players even if they are manufacturing outside China. So today, while a Chinese player may be manufacturing in Indonesia or Morocco, but if the entity is identified as a foreign entity of concern, there will be more restrictions from the US player. And the restriction is not only in form of duty, but the restriction is also in form of the kind of benefits they would be able to, the local cell players in US would be able to get. Point number two, that in India, right now we are seeing a lot of momentum and a lot of support from the center towards pushing the lithium-ion value chain. Now, of course, in this there will be made various measures which will be tariff and non-tariff barriers, but it is too early to comment upon whether they are at the advanced stage or at their early stage. But all we can very confidently say is that the first step itself is very progressive, with Indian government coming up having to have a 60% mandatory localization. Of course, this is only the first step. Going ahead, we do foresee very progressive steps to be taken, both in terms of BSS as well as in terms of anode materials in India.
And I had one more question on graphene. So I read about your new initiatives. So actually, there are nearly 40 plus companies who are startups in graphene globally, and there seems to be some companies rather who've already reached some kind of critical mass in terms of the scalability of production in these products. In which case, is it feasible to kind of acquire a company in this business or start a new capacity? I wanted your thoughts on that.
Rajesh, to keep it brief, I mean, we have evaluated almost all the startups which are today. Our graphene work is going on for about 10 years. There are two things which give an edge in graphene. One is the cost point, because when you just look at the numbers of graphene, the cost per kg is very insane. And we have used our own technology in order to develop the synthetic graphite, and we also have some natural graphite tie-ups. So to develop the feedstock, to develop a consistent feedstock of low costs. And second point is quality, because in graphene, even to supply to one particular application, there can be 10 types of different graphenes. It is a very customized product, because we are talking about wonder material which is actually split, you're talking about just some layers of atoms. So we have our edge is quality as well as cost. And yes, we have evaluated a lot of companies, but our focus is scalability. Because while R&D is, as Riju and Basanji said, R&D is the engine, but end of the day, the whole thing revolves around the commerciality of the product, on which today we are very confident on our product.
And this is going to be my last question, addition. Going to be in flakes, CVD graphene, or graphene flakes, or what product exactly you're looking at?
Rajesh, this I cannot answer right now because we have a mix of technologies. So on technology, I would not be able to comment right now.
Okay, thank you.
Thank you so much.
Thank you, Rajesh. We'll take the next question from Devang Sanghavi. Devang, please unmute yourself and go ahead.
Am I audible?
Yes, Devang, loud and clear. Please go ahead.
Yeah, thank you. This is Devang coming from Abacus. My first question is regarding the TACC company. How quickly we can ramp to optimum capacity utilization, and how do we start initially? At what utilization can start for the first year, say FY28, or maybe Q4 when we are starting this particular plant?
Devan, we do in our business plan. We do have in the initial times, in the initial couple of months, we would have less than 50%, but we are confident that within a year's time we would be able to ramp up beyond 75%.
Okay, and what is the optimum we can reach for this particular plant? We can go to 95 types. Is that a good number to take?
We are well spaced within our capacities, so definitely we can go above 95%.
Right, sir. And in terms of the other two, the IPP company as well as the BESS, what can be the optimum top line for both these entities at full utilizations? Maybe a rough cut number for the same?
You mean to say the BESS manufacturing, that the cell to pack, manufacturing?
Yeah, the 6 gigawatt what we are planning to go to. Yeah.
Maybe Hiren bhai, you want to?
Yeah. So actually, with the ultimate capacity, I think we should be able to target 6,000 crores.
6,000 crores for 6 gigawatt, right?
No, just to put a caveat here. This is not just the sales of the pack, but also because we will be selling the solutions. So it's like for example, in BESS, we are not just going to be a supplier of the pack, but we are going to supply the entire container, and we will also be system integrators. So a lot of revenue will also come from there. So this 6,000. Yeah.
Okay. Yeah. And in the IPP model, what could be the optimum top line similarly?
So as I mentioned to you, IPP business should not be seen from a top line perspective because it is more of an IRR game.
Okay.
Yeah, because we will be following the asset recycling model. At this juncture, we don't intend to be a pure play IPP like rest of the folks. So you should look at the kind of IRR we will deliver, which you already indicated earlier.
Yeah, 20% plus. Is that the number you recall correctly?
16 to 20 is the range we have.
16 to 20. Right, sir. And can you just break the capex year-wise for all these entities going forward? Will it be possible?
Well, if you just go to that slide, look, your TACC after this investment of 2250, we might possibly expand it to 30,000. Okay, so there'll be some capex there. I think that sheet contains, so Puneet, if you just show that.
No, what I was coming to up till FY26, how much we have incurred? I think you said 30%
for TACC up to FY26, how much we have incurred? Okay.
And probably what will be the second half capex, or what will be the F27 number accordingly? I was coming to that numbers.
So maybe Puneet, maybe correct me. In case of the RE power generation, we have not invested anything so far, any meaningfully, barring a very tiny amount. If you look at these four businesses, anode material, as Ankur indicated, we have about 30% of this capex is incurred. Battery energy storage solution, Puneet, about some 50, 60 crores, 60 odd crores.
Around 65 crore is
65 crore capex, capex. And then RE power generation, not capex, not equity, not capex.
I was looking at capex.
Devang, I'll give you broader numbers. See, anode in FY27 will spend around 80-85%. Balance will be retention money for the performance. The large amount will be invested because the plant needs to be live by April 27, March 27. On the RE plus the battery energy solution side, till date, we have spent only 50 crores, and the balance will be deployed by quarter three of FY27 because the capacity will be coming live by quarter two.
Right.
On the RE generation solar base, one project which we are doing and that needs to be live by quarter 3/27. The capex will be used. That will be roughly around 235 crores. The other capex, the balance capex will be in mid of FY27 and 28. So larger amount will be going after quarter three. But anode will be 90% or 85% will be done in this financial year. I can't say the exact quarter by quarter because there are key milestones on the payment and the delivery. But on 4300, you can say by quarter three, most of the amount will be deployed.
Right. And we had last time guided 30% EBITDA margins for the anode powder business. We kind of maintained that guidance.
Yeah, we maintain that. That is for sure.
Right. That is for sure. And also in the power business, sorry, not power, in the anode powder business, we are also looking out for some subsidy from government, lower power cost. So has any progress happened on that side?
So we have
Yes,
already.
I think that's what Ankur was mentioning also, that when we compare ourselves, one of the major costs is power, and we were trying to get a good favorable power cost from the state, and we have been able to get a very good rate, which I can assure you, I can't say the exact rate, but I can assure you that it is probably much better than any Chinese, or definitely much, much better than any European or American supplier would be getting.
Right. So it's very competitive in terms of.
Which is why we are quite sure that on a per ton EBITDA basis, we'll be able to perform at around 30%, with power being 30% of the cost itself.
Yeah, that's why I'm coming to basically, yes. Thanks, Riju. This is very helpful. All the best for the projects.
Thank you.
Thank you, Devang. We'll take the next question from Shubham Thorat. Shubham, please unmute yourself and go ahead.
Hi, am I audible?
Yes, Shubham, please go ahead.
Thank you for the opportunity. This is Shubham Turat from Perpetual Capital. So I just have a few questions on our legacy business, that is our graphite business. So what kind of demand and supply situation are we facing there, and what are the growth drivers for that business going forward?
So Devang, to be very honest, I mean, we had kept this call only very specific to the HEG demerger that is happening. But so we were not really talking about the existing graphite business. But I think if Manish is there on the call and can answer this question for everyone quickly, I think that will be great. Manish, are you there?
Just give me a second. I'll just check with Manish. Give me a second, please. Shubham, if you could just continue, I'll just check and ask Manishi to respond.
Yeah. So in the battery energy storage business, so could you please clarify on the kind of business model that you following there? Is this an assembly business, or have we developed any kind of tech over there?
Hiren, I think.
Yeah. So we have three business models. Actually, we start from design, then we do the engineering, we do supply, and we also do installation and commissioning. So as far as the large scale BSS, utility scale BSS projects are concerned, we do complete end-to-end, design, engineering, supply, installation, commissioning, and end-of-life treatment of the battery energy storage solutions. So having said that, we do EPC business, turnkey EPC. We also take a scope of system integration, and we also are looking at product sales. It will be these three business models which we will continue. So a couple of minutes ago, Basant sir mentioned that the turnover that we are looking at the apex production quantity of 6 gigawatt hour. So we are looking at something like 6,000 crores, where we will also have a bit of EPC business that we do. In terms of technology, we have hands-on knowledge about. So we have hands-on handles on the technology as far as the battery cell to module and cell to pack is concerned. We have BMS, which is in-house, both slave as well as master. And then we also have developed a USP in terms of energy management system, because when we go to grid utility scale, energy management system is most critical component for basically making the batteries work through the life cycle. So these are some of the advancements that we have done. Of course, the first and the most important primary aspect is the selection of the right cell and the selection of the right product for building your systems. Thermal management, liquid cooling technology. These are some of the other complementing components or complementing products which we have developed. So this is what I can say as of now. But yes, we are going to be a technological player in this ESS systems.
Thanks, Hiren. I think Manish is here on the call. Manish, if quickly you could take us through the current prospect of the graphite business, because the gentleman just asked that. So it will be good for everyone to just know that very quickly in 2 minutes.
Yes, sir. I'll be quick because this was the agenda for this for demerger explanation. Shubham, you see, we are catering to electric arc furnace steel making. That's where our product is used. For every ton of, let's say, steel melted, 1.5 kg of electrodes gets consumed. So what is happening now is that more and more electric arc furnaces are coming in the Western world. Already, if you exclude China, it has already crossed 50%. 50% of all steel made in the world, excluding China, is from electric arc furnaces. And this is only increasing by the day because of decarbonization efforts. There are no new blast furnaces coming in the Western world. Whatever capacity is getting added is getting an electric arc furnace. We, as well as our peer group, have a clear visibility. We know the steel plants which are being constructed as we speak. So we foresee a demand of about 200,000 tons. We know for a fact that nobody outside China is expanding. We have the technological edge. We know we compete with Japanese and American, these European companies. So we have a good standing. As a plant, this is the largest plant in the world, ex-China. And as a graphite company, we are the third largest company of the world. So we have good cost control, cost competitiveness, I would say. So, and the demand which will come in the next 3, 4, 5 years or even later. So we'll be very well equipped to handle that. Even today, as we speak, our capacity utilization is between 85 and 90%. And these are the worst of times which we are going through. So we believe that when steel production increases, right now it's stagnating, but when it increases, electric arc furnace steel will grow, and HEG will be there as one of the very reliable suppliers. That's all from my side, Shubham. If you have any query, you can always give me a direct call. But right now, the purpose was different for this call.
Sure. Yeah, that's it.
Yeah, Shubham, satisfied?
Yeah, that's it.
Thanks. Thanks.
Thanks, Shubham. We'll take the next question from Rohan Baranwal. Rohan, please go ahead. Rohan, please unmute yourself and go ahead.
Yeah. Thank you for the opportunity. So I'm Rohan from Arihan Capital. My question was on the BESS side. So currently, if we see the tendering prices for the whole market is actually very competitive, and the prices are a little bit lower side. That's why most of these, like the peer groups, like peer BESS manufacturers, are not able to get the tenders. So how do you see these prices to be correcting going forward, sir? And on the manufacturing capability side, as you already have an existing assembly like 1 gigawatt of capacity and adding up a 5 gigawatt more. So will you be adding a container fabrication as well for the manufacturing side, or will it be imported, sir?
So yeah. So first of all, the prices that we see in the market and the prices which are being discovered in the market, actually there's a lot of volatility, as far as these prices are concerned. Today, almost everybody's taking prices from best manufacturers in China. And we all know that, China is highly unstable and very volatile at this point of time. So while we are going through this situation right now, I feel more or less in about 6 months to 1 year's time, this market will be extremely stable. we will see, lithium prices and also the prices of the cells will stabilize. The demand also will, in a way, streamline, because right now there is a demand supply gap. So if you remember, just to give a little bit of background, 6 months ago, the mining was stopped. CATL had stopped the mines for generating or for producing lithium bicarbonate. And because of that, a huge crush or huge shortage is created. 6 months before that, there was excess production. And because of that excess production, they tried to do a correction. So I believe that in the next 6 months, this whole thing, the whole situation will get stabilized. Coming to the tenders and the tendering part, because of this volatility, people are taking aggressive calls going by the traditional drop in prices which has happened. And some, may be able to reach there, but some may not be able to reach there. So it is a dynamic situation, is all I can say right now. But in 6 months to 1 year's time, you will see a lot of stability as far as ESS projects are concerned. Having said that, we have put 1 gigawatt hour of manufacturing capacity. We already have hands-on experience by virtue of this. We have also figured out, the components, and we have also established a local ecosystem. And we've done the hard part of getting all the components and everything certified, and achieved various certificates as well as credentials for our systems and solutions, both in EV as well as in ESS. So the 5 gigawatt hour capacity will be catering to both EV and ESS. And having said that, even the container and the rest of the components will be developed locally. We will be doing the assembly of the containers locally within our factory. So we will do cell to module to pack, and then eventually a container will be built up in our system. We will also have facility to do FAT test and then do the mass supply for these BES projects. So we are building a capacity to do end-to-end solution making for that. I hope I'm able to satisfy your question.
Definitely, sir. One more question on the TACC side, the anode material side. So on the raw material of the anode side, so as electrodes require majorly the needle coke. So it's the same material which is required for anode manufacturing, or like it can be done through GPC as well, sir. Like what is the material for that, sir?
Rohan, as we explained earlier, that there is the requirement for anode is basically green coke. It can be green petroleum coke. It can be green needle coke. And we have the common needle coke suppliers, whether it is US, Europe, or Japanese. And whether it comes to the Chinese suppliers, then we have them also. But again, in case of anode, it is very much not only on the quality of the material desired, but even a customer's choice, because there are several customers who require a non-Chinese material. So we are well positioned to get the green material outside China as well. But to your question, it is the green coke, whether it is needle or petroleum, both the material is green, not calcined.
Got it, sir. So what do we procure? Is it GPC? Because if we see more of the, sorry.
Sorry, go on.
Yeah. So for GPC, sir, we see a huge competition coming from the Chinese battery manufacturers. So how do you see the on the raw material sourcing? Like, will it be conflicted by these Chinese manufacturers, or what is the scenario, sir?
See, again, because we are procuring GPC as well as GNC, and it is all directly linked with the customer requirement. When it comes to China, then if a customer is agnostic of the material, whether it is Chinese or non-Chinese, then we are able to procure both from China as well as outside China. And towards the business plan, what we have made up to 60,000 tons, we are well positioned in terms of the capacities of coke which are available for the 60,000 ton final production. So we don't see a challenge up to 60,000 ton, and in fact even beyond.
Got it, sir. One last thing.
Rohan, we have already run out of time.
Okay,
in
sir.
case there are any follow-up questions, please mail them to me.
Thank you, sir.
Ron, we can connect separately.
Sure, sir. Sure. Thank you, sir.
Friends, we've run out of time, but there are two participants who've been waiting for some time, and those will be the last questions for the evening. uh, Nikhil Singh. Nikhil, please unmute yourself and go ahead.
Hello.
Yes, Nikhil,
Sir,
please go ahead.
sir, my question is on the best side, on the IPP side, the sir mentioned like we have some asset recycling model. Can you like put detail around that?
Yeah. So Nikhil, typically asset recycling model means that once the project is fully in operation, I would say about 6 to 9 months of operational track record. That means the plant has demonstrated its performance and it is de-risked, from the execution standpoint. There are a lot of takers. Like you might have seen, India has now a very thriving, RE InvIT platforms, and
Okay.
the typical yield, there is about 10 to 11%. Now, those guys are the one, who are very, very hungry, to acquire operational assets. So we will build the top quality assets and then flip them, to some of these InvITs or even some other customer, depending upon there are enough, I would say, buyer in market, who wants to really own these annuity-based, return projects. So typically, anywhere between 6 months to 12 months, post commissioning is when we intend to sort of, divest these assets and monetize them.
Okay. And on the battery side, so basically my question is that like battery is an evolving technology, like from lithium ion to sodium ion to on solid state batteries. So do we see some risk in the anode business, like in terms of like oversupply or like market moving to different technology?
Ankur, sorry, Ankur, you are not, we can't hear you.
Hello, can you hear me now?
Yeah, now we
always
can.
goes, Ankur always goes mute when we ask him this question.
So no, there is this is actually when we talk about the anode space, then anode for lithium ion cells. So lithium ion cell today, when we talk about the market, then the commitments of the market is anywhere between 8 to 10 years. Because as Riju explained in the beginning, that our main target segment is electric vehicles. And when we talk about the electric vehicles and top 10, top 20 OEMs in the world, they will not change their strategies in the short run. They will always change. Will always look for advanced developments in the long run, which goes beyond 15, beyond 20 years. And so hence for our 20,000 tons going up to 60,000 tons, we don't see a market per se challenge. Whether it is Indian geography plus our qualification in the export market, we don't see a market per se problem for the anode business. Of course, having said that, when we talk about the advanced carbons company, the reason this is a carbons company is because we are not just focused on anode for lithium ion cell, but we are into very advanced development of various carbon material, which will ultimately go into different kind of new chemistries as well. So we are also evolving with time, and we will be well positioned for these new chemistries as and when they come.
Yeah. Okay. Thank you, sir. All the best.
Thank you, Nikhil.
Thank you, Nikhil. We'll take the last question for the evening. Jigar, please unmute yourself and go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah, thank you, management, for the presentation and accommodating the question, even if we are out of time. My question is based on the PwC valuation report, wherein additional notes they have given the projection up to FY30 for various green tech segment businesses. So I just wanted to, if I calculated roughly, it is like 5,000 crore of revenue by FY30 with range of 20-25% of EBITDA. So I just wanted to ask what kind of major tailwinds or headwinds you see to that number. I believe that number might be conservative one, right? So are there any upside surprises or downside risk that I wanted to know from the management?
I think Basanji can answer that better, but I think as far as I remember in the PwC report, I think we've taken only the RE plus, the hydro and TSCC numbers in place. We have not considered any growth in TSCC. We had not considered our buying 50% of the hydro assets over there. That this report was pre us buying the hydro assets at a very, very cheap cost. And I think we had not considered the IPP business over there. So
Correct.
Basanji, you can.
Yeah. So, Jigar, the RE plus, as you know, what herein mentioned that we will be aiming 6,000, but of course in the long run. But if you were to look at the entire BSS landscape in India, where the 50 gigawatt hour per annum looks imminent, and even if we target, say, I would say 10% of it, we're talking about 5 gigawatt, 5,000 megawatt hour. And if I were to take on an average about roughly whatever, say 60, 70 lakh rupees of our own, our I would say value of the maybe it will be more. This itself gives about 3,500 crores. So what I'm trying to make that the RE plus will definitely have a lot of tailwind, so you'll be up for surprise, from RE plus in some time. And as Riju mentioned that we will expand our anode capacity also as we stabilize our first phase. So the 10,000 ton of capacity expansion looks very, very imminent at the same location at a much lower capex. And then the additional revenue coming in from, as you mentioned, 49% revenue from extra revenue coming from the acquisition from Statkraft stake, and then the IPP. So there are a lot of tailwinds. So I hardly see any headwind, honestly, why this number should not be higher. As far as EBITDA is concerned, I think, this number should hold good, across all our businesses.
Yeah, thank you. Just one suggestion or maybe remark. In the presentation, there is a pre and post scheme shareholding pattern for public holders of the HEG. May I recommend or may I suggest that we can also mention non-promoter existing HEG holders. Stake was like some 20-25% in the Bhilwara or the sub-segment. Now, post-scheme, it might reduce to 18%. And because of the external investor, total non-promoter holding might be 38%. Something like that. So it might give an exact picture that there is no significant dilution, but it is mainly from 22% to 18% for the existing non-promoter holder of HEG.
Thank you.
Thank you, Jigar.
Yeah.
Friends, that was the last question for the evening. I now hand over the webinar back to Mr. Jhunjhunwala for his closing remarks.
So I think I'll ask Basanji to give his remarks for 1 minute, and I'll follow up on that for the closing remarks. Basanji, please.
Yeah, thank you. Thanks, everyone. And, very insightful questions. And I think, while we did try to respond to best of our ability, but due to paucity of time, if any one of you feel that you still have few questions, feel free to reach out, to SKP team, and then, get back. One thing I just want to reiterate that we are a group, which want to grow in a very responsible manner. And what it means by responsible manner is both in terms of governance and also prudence. So these will be two cornerstones of our growth. Businesses which we are now gotten into via green tech are all tech-led businesses. So we will be a technology company, while we will manufacture anode material or even BESS or making packs and all. But everywhere we will embed technology. We are focused on creating solid IP, and there is a good chunk of money being kept aside to build very, very strong R&D team. Hence, and this is the only way for us to really be a significant player in these space, and ensure that we don't really get commoditized in time to come. So this is the assurance we just want to give all of you. Over to you, Riju.
Thank you, Basanji. Thank you, SKP team. Thank you to all the investors. And last but not the least, thank you to all the investors, to all the management team that we have here. If you ask me, we are trying to run this company very differently to what we run the traditional manufacturing companies. There will be in times to come, in very close times to come, a very generous ESOP option for all our employees. People ask me as to how do I see myself running the company different to running a textile company. My answer remains the same. I mean, in the textile company, I'm the senior most person, but the youngest person in the room. Over here, I'm the senior most person, but probably one of the elder people in the room. So we have to make room for, kind of young leaders, young people who are well acquainted with technology, who can use technology, AI, etc., who have passion for running their particular businesses, the way Hiren has a passion for these, Ankur has a passion for graphite, Basji having a passion for excellence and for for the IPP, etc. business. People like Ajmera ji who've been with us for long in terms of adding more to the hydro portfolio. Manish, of course, who is running the current graphite business. Puneet, who's kind of helping on strategy, and all the other people, Salil, etc. And apologies if I've missed anyone. It's a one team right now working on delivering results on both sides, on the HEG graphite side and on the HEG green tech side. So to my mind, I see it as a very, very good opportunity for HEG shareholders to really, like I said in the beginning, to have their arm in both the pockets. As and when the company gets delisted, you'll have shares of both the companies. And I think we have very, very good long-term plans to run both the companies in a very, very good manner under all the professional management that we've seen today. This was just to demonstrate to you that the depth of management that we have, despite the different businesses that we are trying to commit to, will never be kind of this lessened. And like Basanji said, I'll just close on one remark that this will be responsible growth and ethical growth, something that the group and the company is always known for. Thank you very much.
Thank you,
On behalf
everyone,
of
and have a great
on
evening.
behalf of
Thank you, sir.
SKP Securities, thank you, Mr. Junjunwala, and the entire leadership team at HEG for taking time out
Thank you,
and
everyone.
answering all the
Thank you.
questions. And we
Thank
look
you.
forward to hosting you for the Q3 results.
Thank
Thank
you.
you and bye-bye.
Thank
Thank
you.
you.